Good evening, everyone. Mr. Anderson here, and I'm sure we're all wondering, is the Bitcoin rally over? And I'm here to tell you that if you've ever made the mistake of telling your friends and family that you invest in Bitcoin, they're probably asking this question right now. Are you winning? And your answer is unequivocally and emphatically no. Stop telling your friends and family that you invest in Bitcoin. Now, that being said, this is the previous cycle bull run that started in 2020. And this is the daily chart. On there, we have two exponential moving averages, which have historically shown Bitcoin's bull runs and bear markets. So as you can see, back in November of 2020, those exponential moving averages diverged with the shorter one on top of the longer one, and it showed its parabolical uprise that we're all waiting for this current cycle. Looking at the current cycle, we had a period of consolidation shown right here that was to the upside, and then we had a first parabolic rise that started at the end of October, and then we had a period of retracement, and then we had the release of the ETFs, and then we had our second parabolic uprise followed by this consolidation. Now, as you can see, as these exponential moving averages start to converge on each other, it starts to show that we're having a change in direction. Once they cross and the shorter time frame goes below the longer time frame, we are now showing a change in direction. And it's important to note that, as you can see here, we've had several instances where we did cross, but then immediately crossed back up. And that happened back in July. Now, the other important thing is back in 2020, on May 11th, we had the halving of Bitcoin, and it took a period of 142 days of consolidation, generally to the upside, before we had our parabolic bull run. We are currently only 14 days post halving for this current cycle. So the expectation that we were going to have another parabolic rise shouldn't have been there. Now, here's the actual chart shown with perspective, and we're only 14 days. We have about 130 to 120 days left before we really should see our next parabolic uprise. Now, here is another indicator that I'm sure a lot of people are familiar with, and it's good to review just to make sure you know where you are in the cycle. Again, this is not a perfect indicator, but it is helpful along with some other indicators to show where the bottoms and tops are. So here we have the top according to the Pi cycle that happened on April of 2021. And it's when the yellow exponential moving average converges over the white simple moving average. And so that was in April. Now, looking at the current cycle, you can see that there is still a gap between the white and the yellow line, but they are converging. So we know that one, we're getting close to our parabolic bull run, and eventually over the next few hundred days, a peak in price. Now, what I did here was I guesstimated and added my own projected lines for the exponential and simple moving average and when they might converge. This is far from science, but it is kind of helpful to gauge where price might end up. And this could be sooner or later. It really all depends on how these exponential and simple moving averages converge and diverge over time. And that obviously will have a lot to do with buyers and sellers and demand and supply. But with that, I show, as of Tuesday the 31st, so the end of 2024, a projected convergence. And that would put the price at about that point around 160, 165,000. But if we remember looking at the other page for the convergence of those two simple moving and exponential moving averages, the price actually went another 33% higher once they crossed. And if we project that on this chart, another 33%, that would put the price at $226,000. So I'm not predicting that this is going to happen. I'm just trying to show you what the chart is potentially telling me by guesstimating where these lines are projecting to as they stand right now. So right now, fear and greed is finally below 50 after being up in the 60 and 70s for what seemed to be forever, and even after we had several dumps. So this is a good sign. We buy fear, we sell greed. Now, taking a closer look at the current price action, again, this is the daily. The only patterns that I see through the auto charts is a double top with a price target down to the mid 40K price range, which, watching other people's analysis, there is the potential to come that low. I do have the Fibonacci chart for this current trend, and we do have an area of demand that coincides with the golden pocket between 0.65 and 0.618. And generally, these patterns come to about 2/3 of their price targets, and that would perfectly match that retracement area. So that is something to consider. And we also have the 200-day simple moving average that will provide support as well. If we punch through that, that means something's bigger going on, and that might be, again, the macroeconomic environment. And I think there is potential for us to go lower, but I think the very bottom is more than likely going to be the low 40K region. That being said, we are also forming a descending wedge with a corresponding price target that would give a triple top to this formation at around the $74,000-$75,000 range. And then the other thing to keep note of is that we do have this descending parallel channel, which historically has, for the past few months, our consolidation area. And we did drop below it, and on the daily, that is acting as a resistance. Now, that being said, we also have this ascending parallel channel, which is acting as support, and we are printing a 9 on the trend reversal indicator right now as well. So that's a good sign showing that we are oversold at the moment. Looking at the oscillators, momentum is to the downside. MFI is below 50, and we are getting to not really the oversold area for the RSI, but we're kind of in the mid area with the stochastic still showing momentum to the downside. And we do have the MACD, which has given us about 4 MACD FEUs all the way down, and we have had the longest period that I have looked at the chart of red histogram bars. So that's something that we have noticed as well. And looking at Market Cipher, you do see that the money flow is, it did dome out, and we are slowly coming to a bottoming area. Again, last time that we did that, we didn't go into the red, and I don't expect us to go in the red this time. That would have to be a lot of money being pulled out. Now, GBTC is doing that for us. Every day or so, we're getting about 4,000 to 2,000 Bitcoin being transferred to Coinbase to sell. And we have about probably 45 to 40 days left at the rate that they're selling before they run out of Bitcoin. I don't think all of the customers are going to sell, and there's reasons why they probably wouldn't, but many are because it's a higher maintenance fee. So financially, it doesn't make sense to hold your holdings in GBTC if you can get a lower maintenance fee with the ETF. Now, looking closer on the hourly, as I said before, this is the bottom edge of the parallel channel, which is now acting as resistance. And down here, we do have the ascending parallel channel, which could act as support. And this demand area has been acting as support as well. So we may come down and retest that before we begin to recover. So just be aware of that. And this is an updated chart of the retracements. And this has been the steepest retracement so far, but still within guidelines of the bull run as we have seen it for now. And we could come down another 20 to 30%, and this would still technically be a bull run. So we haven't broken anything that substantially changes the fact that this is a bull run. Other things to look out for in the economic calendars, we do have the non-farm payrolls tomorrow, forecasted at 243K. Prior was 303K. Unemployment rate is also going to be given, forecasted to be 3.8. Prior was 3.8. We're going to get the PMI, which is projected to be 52.1, and the non-manufacturing PMI, which is going to be expected to come in at 52. I don't think there's going to be a lot of issues with this. I will say that unemployment rate above 4% is going to start to become concerning, and I do see evidence for that to rise over the next few months. And then May 9th, we have the initial job loss claims, which also, depending on how these things are reported, may increase. However, the prior was 208K. And the U.S. labor market right now, face value is still tight, but again, there's indications that that is potentially faltering. And then we have the CME Fed Watch tool. And right now we are projecting a 1 rate cut in 2024 during the Fed's November meeting. And again, this may change. The Fed has been pretty poor on projecting what they're going to do. At the beginning of, or at the end of last year, they're projecting 6 rate cuts, which I don't know how you predict that based on how they gather analysis. They're very reactive to 0 rate cuts, and we didn't have a rate cut yesterday. So that's something to watch out for. Now, there is a reason why they will conduct rate cuts, and that's because of the government's own debt. The debt of the U.S. government is costing taxpayers $1 trillion in interest payments alone. So if anything, not for the citizen or for the business owner or those who have loans or who want to buy homes, the first thing they're going to do is probably cut rates because they can't afford their own, or the government can't afford their own interest. And to put that in perspective, right now we spend close to $1 trillion on our own military budget every year, and interest payments just surpass that. So that is a big deal. It's going to be about 1/6 of our yearly budget for the United States. That's significant. And if it progresses this way, it'll end up being 1/3, and that's not counting unfunded liabilities such as Medicare, Medicaid, and Social Security. So that being said, everything is fine, and so far we are doing okay, and this is a great opportunity to dollar cost average if you can. And I think we're going to have some good opportunities to do some trading up until the point that we enter the parabolic bull run. I hope this helps, and I hope you're all doing well. And if you have any questions, please let me know. And if you want to do some TI and some other charts, send them my way. Thanks. Good evening. Bye.